And in our business stories, the International Energy Agency has warned of a looming oil crunch as industry leaders gather in Houston to discuss the state of the world's oil market. The Paris-based energy watchdog said in its annual midterm outlook that global oil supply could struggle to keep pace with demand after 2020, risking a sharp increase in prices unless new projects are approved soon. It is a warning that the IEA has issued amid an unprecedented crash in investment following the oil price slump that began in late 2014, which depressed world oil and gas investment to $450 billion last year from $780 billion 2 years before. Oil prices have recovered during the past year from lows of about $30 a barrel to sustained levels above $50 a barrel following the December deal between OPEC and non-OPEC producers to limit production. The IEA outlook echoes the prediction by the industry consultant Wood Mackenzie that while industry finances and investment will improve this year, especially in the US, the industry as a whole will still experience a decline in capital spending. The introduction of the value-added tax by the GCC from the 1st of January 2018 will only have a short-term impact on the spending power of locals and expats. That's according to a new report. BMI research said that the 5% general consumption tax will be the largest measure to impact spending power of GCC citizens. The report outlined that as companies typically pass these costs down to consumers, it expects to see a 5% increase in prices for the majority of goods and services in 2018, therefore leading to a short-term negative impact on consumer spending as households adjust to the new prices. BMI, however, projected consumer spending levels to remain stable, driven by the relative wealth of households and low inflation, ensuring purchasing power is not eroded significantly. The UAE is expected to exempt more than 100 essential commodities from the tax list. According to a new report by the property broker Core Surveils, Dubai's once booming retail market is starting to show signs of market saturation. The property consultancy has predicted a glut of more than 800,000 square meters of new shops set to be built in Dubai over the coming 3 years, as projects such as the Dubai Mall expansion and Nakheel Mall and points on the Palm Jumeirah start to complete. Dubai's total retail stock increased by 8% in 2016, pushing the total market size to nearly 3.2 million square meters. That is forecast to grow by 25% over the coming 3 years. New malls are expected to open just as retailers are feeling the effects of lower oil prices in the GCC and a strong US dollar to which the dirham is pegged, making Dubai a more expensive place for tourists to shop. Core also stated in the report that the shopping center market in Dubai is set to become more segmented as smaller malls in outer areas which lack public transport access will suffer from falling rents and high levels of vacancy. Dubai and Jeddah have become comparatively cheaper to build in over the past 12 months, but FIFA World Cup-related activity is continuing to inflate costs in Doha. That's according to a new study. The International Construction Costs 2017 report by Netherlands-based consultancy Arcadis has stated that Doha has now become the 11th costliest construction market out of the 44 global cities that it tracks, while Dubai fell by 1 place to 19th, just below Jeddah in 18th. The report argued that across the GCC in general, construction costs were falling as lower oil prices and the stronger dollar to which most GCC currencies are pegged were both affecting local markets, with deficits forcing governments to curtail project spending and end subsidies. The consultancy said that despite the significant levels of investment needed in Dubai to help deliver the Expo 2020 project, private sector investors have been less willing to spend as residential, retail and hospitality markets were flat last year. It added that transport spending remains a priority, with rail, metro and airport expansion programs in Dubai forming the basis for a project pipeline worth about $70 billion.